Good morning, guys. How's everyone doing? Video is good. Great. Thanks, JD. Sounds good too? Great. Okay, guys, let's get started. Quite a day yesterday, huh? I actually wanted to, I know that I have a couple of new people on this morning, and I actually wanted to start with just a minor point from yesterday's trading. It's two things that I want to go to that are very fundamental for every day. And that is, if we look at ES, even as we were driving straight up yesterday, you'll notice that with the exception of the first zone where there was very little rotation, right, that from each zone we actually got a 2-point rotation or very close to a 2-point rotation from the front of each zone when we were driving up, and or it held the zone, right, and gave us a counter rotation back to the downside. In addition, even if you didn't take the front of the zone, if you were taking the middle to back of the zone, right, the 25-minute rule in each of these cases prevented you from having any kind of loss. In the particular case of the last zone, it actually, if you could have survived your stop wherever it was in the zone, you actually had a chance for a 10 to 13 point roll down to the downside. So at its most basic, regardless of the rotation, occasionally, as in this case right here, the zones will just straight away bust, and there's not much you can do about it. I don't work to try to prevent it other than put in some extra measures in terms of the size of the rotation. But at every zone, when it touches the first time, whether it's the front or from the back, I expect a pause and or rotation, and the same thing from the backside, right? We touched here, we came back down, touched the zone below, and we got responsive buyers. If you look on the way down too as well, right? Even if you had taken the long here, 5, 10, 15, 20, 25 minutes before the zone broke, okay? So it's very imperative as you get through the day that you are, A, using the proper stops, B, you're keeping your eye on the amount of time that we're spending in the zone, right? And even on a straight day up, there was opportunity on the short side and or, right, you had plenty of opportunity to get out with a small to minimal loss. Considering this is pretty much a 20-point drive straight up off the open into 11 a.m., that's pretty damn good. The other thing I want to point out here is that time-wise, look at between this 9:30 to 11 a.m. time frame, and you'll notice starting at that point, if you waited till 9:30, you at least started to get rotations to the downside. Again, we got rotations to the downside without getting stopped. Key area prior to 9:30, particularly on days where we have open drives, the market tends to not give very much rotation and or pause. It drives straight through it. So again, I want to highlight that time frame as a key time for reversals, and obviously we ended up setting the high of the day right at the very end of that time frame. So it's a lot of things to keep up with, right, as you're also watching market action. And the idea is that you don't have to watch every single tick in the market to get an idea of where a potential reversal will come. We already know the trade location where we would like to trade based on our risk profiles. It's simply a matter of letting the market come to us. The other thing that I want to point out is a lot of times the focus the trader will do is, well, I did this wrong. All of our focus can get on what we're doing incorrectly versus what we're doing correctly. So it's important to note what you are doing incorrectly, obviously. But once you've done that, make a more heavily weighted list and go into more detail into what you are doing correctly. It's been a very big goal of mine over the last month and a half in trying to find a solution, because I've been missing these moves early in the morning. And part of moving this meeting up to 7:45 was specifically to be able to make that shift and catch these early moves. And I did exactly that. Now, I'm not always going to call out the trades when I see it, other than, if you know that I say open drive higher, you can assume I'm getting long or trying to get long very, very quickly. Sometimes with a zero tick, sometimes without a zero tick. But once you recognize these, I have flipped my trade book to a trend day up playbook. The second thing to make note of, it's 2 stages. You don't expect yourself to go from protecting yourself when the market's moving against you to being able to flip and get long, right? There's a big emotional journey between, well, I don't want to get smoked on the short side, I'm going to pull back, to not only do I not want to get smoked on the short side, but I want to participate on the upside. it takes time to get your brain to come around to that. And these are each small little steps in a larger game plan to make more and more money. The first goal in my trade plan is to avoid getting my risk capital taken away from me. That's number one. Number two is to add to my risk capital as aggressively as possible if the market will give me my trade in my location where I have the highest odds of coming out ahead on that trade. That's all I want to leave with that. I wanted to make sure everyone understood. Primarily, at the zones, regardless of the day, I expect pauses at the minimum, okay, and rotations down at each zone, regardless of the amount of strength that we have in the market. Same thing here. I expected a counter rotation here. We didn't get it, okay, but the rules that are around it, right, it gave me the pause and it gave me enough time to take an attempt at the upside. Once I exceeded my time frame for where I normally get paid, it gave me plenty of time, or would have potentially for anyone who took a trade here, gave you plenty of opportunity to get out with minimal to no loss. That's all I'm going to leave. I'm going to leave on that note and go to today's trading. Oh, one other note. At least on my particular chart, the first hour, the tick, NYSE tick was predominantly positive. I realized we went a little bit negative right after 9 o'clock on that first zero tick. And also realize on NYSE tick, it changes by firm. Several of my clients said they got zero ticks much earlier in the cycle. I trust TradeStation's tick reading, but every firm has a different tick reading. It is not unified. Let's go over to today's trade. And let's start with ES and what has to happen here. So we've actually had some decent moves. Someone must have come out with earnings or something because we popped a little while ago. We've had Globex low at 1841, which is sitting right here. And then we've had Globex high at 1846 3/4. And we're sitting right in the middle of those two things. You'll notice there's really not a zone at Globex low. And the reason for that is I can't get 2 points of separation between gap fill, which is right here, and Globex low. So Globex low will stand on its own. And when I think through this area right here in the day, I'm thinking what's going to happen. We could simply come in to Globex low and reject back up, possibly. But I think I'd rather play for Monday's low in terms of rotation and trade size on where to look to get locations, simply because we'll have a better stretch. And even then, right, if we open at 1844, right, 1836 would give us almost a 6 to 7 point, let's see, 1844, 4, 3, 7 point rotation down into this area. And so I'm more likely to take a long out of here based on, of course, we could open right there at the low and that all gets scratched out. But I probably will not take a trade off of Globex low, and instead we'll look to Monday's low, which may mean I simply miss it, but I want a rotation, and I simply can't get a rotation from 1844 to 1841. It's 2 points. Even for me being aggressive, 3 points. Even for me being aggressive, that's too small a rotation, and I think I'd rather wait. Number two thing, even though we saw this sell-off yesterday, right, we did not get below yesterday's low, and so I am not necessarily bearish. That was simply a huge extension. We've had multiple days up, and we found some profit taking at the end of the day is all it was. We can still certainly come up and hit new highs in my mind, so I'm not, what I'm being cautious of is using the evidence of the last hour to turn and go, okay, now I'm bearish. Give me just a second to drink some water here, guys. And I find a lot of people want to find the top in the market, and I don't think it's necessary. So I'm keeping my eyes open to either scenario. What I do notice out of the gate is that this 1846 3/4, okay, and I'm going to flip back to yesterday's chart one more time, okay, it's just a point above this white zone, and this was Friday's high and the former year-to-date high, this 1843.56 to 1845 3/4. So this area, you may want to mark on your chart, okay, is very important. In essence, if we're below 1843.56, where we rejected yesterday right there, If we are below that, that essentially creates a trap trade. And my longer term clients, my coaching clients know what I'm talking about. And that means that all of this, right, everyone who was long in all of this, or the shorts who bailed out of this, have to reestablish position, and they're all trapped on top, right? That's only if we get below that 1843, 56 and hold, does it create a trap trade. So it's something to keep in mind. This is a critical area today. So that area didn't exactly translate over in today's charts because of the way the overnight laid out, but essentially that extends this zone down by another point or so to right here. So how does that set up our day? Right now we're trading 1845 right in the white zone. If we reject right out of the white zone, we did it to Globex low, and then we are unable, either from Globex low or from Monday's low, to recapture back above the white zone. Okay? That would trap everyone, and I would expect to move down to at least 1832, 1834 area. Okay, now on each of these zones, remember when I'm going through these scenarios, guys, I want to be very clear. At every actual zone, here, 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 and then up and down the rest of the chart, I expect a pause and hopefully a counter rotation. But at the minimum, I expect a pause. The reason for the size of the rotation being important is because it decreases the odds of getting the zone blown through without a counter rotation. Some clients want a way to avoid that. Some of my clients trade every zone simply at the zone, and they take the trade that's in their trade plan. The important thing there is whatever you are going to do today in your trading, have it in your trade plan and follow the trade plan all day long. If there's a problem with the edge or the trade plan needs adjustment, then adjust that trade plan, but don't try to figure out while you're trading, because that's where frustration, fear, anger, and confusion come from, is trying to adjust all that on the fly unless you have a lot of experience and you're able to do that easily. Okay? Myself, I much prefer to have the trade plan written. The flip on yesterday going long on the open drive higher, that was scripted. I knew exactly what I wanted to do and exactly how I was going to handle it. And I reviewed my trade notes last night, and I actually made some adjustments for future notes in terms of taking shorts near the top once we have big extensions like that. But other than that, everything I did, I had pre-planned. So with that being said, if we get below the white zone, right, and we reject off of here, the white zone now becomes the test, really maybe even 1843, right? If we cannot recoup the white zone, I would expect levels lower to get tested. And I would expect rotations at each level on the first touch. I would expect responsive buyers at this open gap the first time, which means I expect larger than a 2-point rotation, probably 2 to 5 points, which would put us back up into Monday's low. Failure to recover yesterday's low after it's broken would open the door all the way down to probably about 1821 would be my guess. That would have us pretty well extended. Remember to keep in mind, what have the extensions been daily? They've been 20 points, just like we had yesterday, right? That means that it's totally reasonable to look to 1866 on the upside, which will put us up here in this 1866 neighborhood. And on the downside, 1826, right? Down here at initial support, it puts us in this neighborhood. And if we go 30, add 10 to each side of that, right? If we go directional. Even if we don't go directional, we can still end up with a 30-point range, right? We can go essentially 1826, and then we could conceivably trade all the way back up to this 1850 level. Okay, so keep in mind, it's a two markets move both ways. Don't get overly bearish and overly bullish. We're in a bull market, so even on down days, this is what I expect. If we get a sell-off early in the morning, the sell-offs tend to be fairly brutal and fast. Okay, then we tend to get buyers come in between that 9:30 and 11 o'clock, and we curve back up. And from that point, we either close near the bottom third, middle, or we can recoup all the way back up to the top. This is something that you should have drawn out and keep in mind. This reversal worked just the same way yesterday, right? We came up between that 9:30 and 11, we peaked out, and then towards the close, we closed essentially, I think, at the halfway point. Okay? It's the exact same pattern. It just flips, whether it's an up day or down day. The gross majority of trading days, I'm not talking about the last 6 months, but the last 10, 20 years, have looked like this. You find responsive buyers below, responsive sellers above. That's how the market works. So what is the first thing that I'm looking for on ES? Let me see how I'm doing on time. Okay, first of all, let's cover the open drive as we do every day. What will the open drive look like? One solid bar, two solid bars, usually a third solid bar, all green. The first 5-minute bar is either the high or the low, depending on direction. Flip it for a downside scenario, right? Let's see, 1, 2, 3. First 5-minute bar doesn't get tested, or you can have one very big first bar. Okay, that's first scenario. Secondly, counter rotations are incredibly small, usually less than 2 points, and the velocity up is usually, visually you can see it's almost twice as fast as it is down. We'll tend to pause. Another key measure that you will see on a trend day up or a trend day down, it has to be observed, but you can see it here. I'm going to pull this up so people can notice. Okay, notice as the tick was coming down here, notice the market traded completely sideways. What does this mean? What does this mean in real world? Tick is a measure of the number of stocks ticking up or down on the total New York Stock Exchange. What this means is as the broader market was being sold, because obviously we were getting down ticks somewhere to get this measure, as the broader market was being sold, the S&P was being purchased, right? They were buying into that weakness. When the selling abated, and buyers came back in on the larger market, we got a push up on ES, and you will notice, right, that up until this entire time, as long as we're still getting down moves, right, that ES held. Where did it break? The first time we got an indication there was going to be a break is that we actually got a series of upticks in the NYSE tick, and S&P 500 actually moved down. That was the first indication that there might be trouble. And look, it was very subtle. It looks obvious now. This is very subtle. We're stuck in the 2-point range. And in my eyes, we could have easily popped up this way. I do not feel bad about missing this this downside move. Other than time frame wise, it was a good location, and extension wise, it was good location. But in terms of sitting in this, man, can you imagine being short here and just this is a full. Let's say we enter this zone at 10:30, and we're still in this zone coming into 1 o'clock. That's a long time to be sitting on a short, and it's not my style of trading. It's highly unlikely that I would have been able to capture this move. So open drive up, open drive down. If I see an open drive, right, you should already have written in your trade plan, what is it you're going to do? Are you going to flip long immediately? Are you going to look for the zero tick trade? Are you only going to trade in the direction of the trend day up or trend day down? Are you going to flip after 9:30 to 11 a.m., right? Are you going to start taking counter trades, or are you simply not going to trade it at all in an effort to protect your capital? All of it is fine. The only reason that these trades have become important at all is because we've gotten so many open drives and trend days since October. They are usually rare. It seems like they comprise probably almost 40% of our trade days now, whereas prior to October, they were about 14% of all trade days were trend days up and trend days down. So that has been a shift. It's been something that everyone's had to adjust to. It won't last forever. It's nice while we have it, okay? But that being said, you have to have a game plan for it now because they're so prevalent. If you don't, you'll simply get crushed. And when they were only representing 14% of all trading days, they did tremendous damage as is. Now that they're well over 30-40% of the trading days, the danger's ever more present. So once you identify this pattern, right, you should have a written trade plan for exactly what you're going to do in this scenario. I do. And I know that I follow it to a T because I don't like getting my butt kicked. And actually, on days like yesterday, where I was actually able to successfully capture the upside trade, I'm elated. There's a lot of money to be made in these. Let's go look at, I don't think I have another scenario for today. Obviously, we need to get above the white zone. We're opening at 1845.50. excuse me, switch charts here real quick. We need to obviously get above the 1846 and 3/4, right? That's going to put us near Globex highs. And then if we do get on the upside scenario, right, what are the tests? Well, obviously, if we come back up into Monday's high, I would expect responsive sellers there, and I will take a short the first time in, barring an open drive higher, right? Same thing with this zone here. I will take a trade first time into the zone. Again, whether I take the front of the zone or the back of the zone will depend on the size of the rotation based on where we open. If we open at, let's say, 1847, right? At 1847, 1850 only gives me 3 points of rotation, so I will aim for the back of the zone, right? If we open higher than that, this zone may become nullified. I won't call the trade out. In which case, I will take yesterday's high the first time in, looking for a counter rotation. I will have the clock running on this thing at 25 minutes. If I can't get it rotation down or less, I'll be gone from this trade. I do not want to get run over here. If we get above, you have to consider these are new all-time highs. The old highs, right? If we go back, let's crunch this up for a second and mark this down on your chart, guys. Okay, we have a double top sitting right here. Okay, or attempted double top or rejected through it, right? Essentially that 1844 and 3/4 was the old high. As long as we hold above that 1844 and 3/4, all we did was we had a little rejection from yesterday, and they have and simply pushed back down into it. But we really did not get down below this level of support, right? We would have liked to see it held here. They gave it a little bit extra push at the close, but right now we're holding above this level of support. If we get back below, right, there's plenty of room to explore on the downside, and would leave a lot of people trapped up here. I'm not saying that they will do that. I'm just saying that's an opportunity to trap a lot of traders who are late here. On the other hand, if we're not breaking down, right, then there's really nothing holding us from extending ever higher on the upside. And this is simply a backside test from traders who got a little too exuberant. It was too much, too fast, and we simply came in and auctioned. What is the answer? I don't know. We'll find out as soon as once the market opens. So the other thing I want to point out is where the traps are today. Pull this back over here. Okay, so for potential trap trades, areas I'm looking, and guys, I'm not going to go through all the details of a trap trade other than to say if we trap, I expect to travel to the other end of the range. So the first potential trap is if we can get above Monday's highs, right, and then we trade back below, I would expect a trip back down to Globex high, and if we can get back below Globex high, Globex low, followed by Monday's low, are the next two targets below. We can also set a trap from Globex high, right? We come in, we trade above, we trade back below. It will be a small trip to Globex low, right? It's not a very big 44 to 41, right? But if we can get below 41, we could also expect a trip possibly to Monday's low, and then further down into the open gap is the other end of the potential there. On the upside, what will we look for in order to set up a trap trade? Okay, well, if we open and we push down either below Globex lows or Monday's lows, let's say we get down to the open gap, we find responsive buyers. I would expect first to see a trap to Globex low, and from Globex low back to the Globex high would be the trap trade that would set up in that place. Now, the way that we handle trap trades, or the way I handle trap trades, is one of two ways. Sometimes you'll get, let's say we're trading here at Monday's low, it'll come in, it'll trade just below, won't stop out, but just below, then come back above and hold. Okay, that is a trap trade that sets up very nicely at the zone. You know to leave your trailers and target areas above for possibly Globex high, right? The other way that it can happen is we break Monday's low definitively, we come down to the open gap. It gets a little bit trickier here, but if we can get back above Monday's low and you still have a trailer and push us back to the other side, remember most afternoons have found responsive buyers and pushes back up. What was I going to say about this? On the most basic trade, so as to not cause confusion, right, for my newer coaching clients, the objective is still the same. You get to a zone, you're looking for a 2-point rotation, and you're done. As you build your trade size and your account size, you can start worrying about the trap trades and capturing larger trades. The other point that I want to make, by the way, while we're on here, some people are experiencing frustration because the market's been hard to counter trade, right? It's been seeming to be more rewarding to actually go with the breakouts. That is a short-term phenomena and smokes people regularly. It's very hard to momentum trade. Yesterday was a great example of why that is. And it is much better if you let the market get stretched and come back to you. It provides much more reliable opportunities. So also the objective is we're only looking for our highest odds trades, and we're only looking for 1 or 2 trades a day, guys. You got to remember that. I throw a lot out there because the idea is that you're building your skill level as you're moving along, and you might recognize additional trades that might give you extra money, but stay to your pre-planned entry, exit, and stops beforehand to eliminate fear, confusion, greed, all those things that mess up your trades, right? As you build your trade size and you build your consistency, then you have permission to increase, give yourself permission to increase your trade size and leave trailers so that you can capture these trap trades and identify them. Also, the other benefit of recognizing the trap trade is this. Let's say hypothetically that this is Globex high, this is Globex low, just for sake of conversation. And we break below here, we get down to the open gap, and we trap back above, and you notice it here. Well, even if I'm just trading for 2 points, right, I'm well aware that this zone right here would now be in the middle and that we're likely to test the other end of the range, right? So what that's going to tell me is that I'm going to be very cautious in taking a trade in a zone that's in the middle of the range and instead target the end of the range for my next trade. I hope that makes sense. How am I doing on time? 8:16. I want to start to wrap it up. I want to look at NQ very quickly. Actually, before I do that, if someone wants to see this, I haven't put this out yet. I will publish it right afterwards. These are the channels that I currently see. And I will post this as soon as I can after I get off the meeting. But it is helpful to go and see which channels are we trading in, right? Not because the channels are what will determine what the market's going to do, but they help to kind of see, when the market's turning one way or the other in a larger picture. I don't trade off the channels, but I do like to see them to kind of get an idea of which way the market's generally leaning. And also, where are the largest channels? Right now, all the channels are clearly still pointing up. But we were stuck obviously in a down channel yesterday, and I look for back tests of these channels too when they align themselves with zones to add a little bit of confirmation either on the short side or the long side. I'll publish this before I get out of here and get ready for the day. And then let's look at NQ really quick. Okay, we have a relatively tight range overnight. We're only down $1 and change on, we're up 75 cents on NQ, only down $1 and change on ES. Okay, so on NQ, 36.90 3/4 is our high right here. This is also gap fill. If we can get above here, obviously a test of Monday's high is the next thing that's in. So where would the trap trade set up on NQ? Well, 2 areas. If we can get above Monday's high and get back underneath, there's a potential to trade back to the other end of Globex low, which, by the way, I'll adjust this zone. Let's see, 83 to 78. I'll probably just adjust this 83. The back of this zone will just come back to 36.78. And this whole area right here will become the white zone for NQ. So if we get above Monday's high and then we reverse lower, I would expect to push down for a test of Globex lows. I would expect responsive buyers the first time under that scenario. If we fail to get above the high out of the gate or just push above and fall back in, again, I would expect to test the Globex lows, but I need to see pretty fast reaction. That's not very much rotation. It's 36.90 down to 36.80. It's not a lot of rotation to the downside, and I generally want at least a 10-point rotation before taking a counter trade there. And that would make it very tough. I would instead, again, just like on ES, probably look for Monday's low as trade location, and I'll probably widen this zone out. Essentially, this 36.71 down to 36.63, you should treat that, this whole thing, as an entire zone on NQ. And again, if we get below and then capture back above, it would not surprise me to see us trade back to Globex highs and then Monday's highs. Above Monday's highs, we have a lot of room to roam. I also want to crunch this up for y'all for a second so you can get a pretty clear, bigger picture real quick. see, where do we break out from? Oh, here we go. This area right here, this 3630 to 3620 area, okay? This is key. I would highlight it on your chart. Nothing is wrong with NQ unless we can get below this 3620, meaning every dip will be bought. It's a bullish pattern, okay? We're clearly in an uptrend. The short side is the hard side on NQ right now. Let me make no doubt about it. No damage will occur until we, like I said, until we get below this area. Now, we can have a pretty nice strip, right? 3,700 down to 3,620 is 80 points. If we get to this 3,620, I promise you I will be a call buyer in here, and I will be a responsive buyer on the futures in here. I definitely would expect responsive buying the first time in. I'm happy being wrong, especially on an 80-point stretch. That is a big stretch down. I don't expect to see that today. If we get it, I'll be a responsive buyer there, barring it comes in the last hour. Alan, I do to a certain degree, but I don't. Pretty much, if on wedges and heads and shoulders, if some guy who's been trading for 2 months can identify a pattern, I discount its viability. The only pattern I definitely look for is this right here. This pattern is my favorite pattern on both the upside and the downside. It's pretty easy to see that. But the wedges, the patterns, the bull flags, all of that, and I'm going to answer very quickly, and then I'll do probably Q&A after the market maybe today. But my litmus test is, does it work 70% of the time? If it doesn't work 70% of the time, it's not good enough. My observation is heads and shoulders is about a 50-50 deal. Same thing with wedges. I've seen them break and then fail. So you won't see me point those out. You won't see me call them out. Occasionally I'll call out a large wedge one way or the other, but I primarily trade the zone, and simplicity is my approach. The zones are my primary guide for where I'm going to enter a trade, and then I'm just looking for additional, primarily trap trade and open drives to indicate when we're going to have trend day up, trend day down, and that's about it. I keep it simple so I can keep my profits high, my confusion low, and my strength and courage at a very neutral and secure place, so I can make good decisions from a good mental standpoint all the time. Anyways, guys, that's all I got. I think I've set up the day pretty well. I have no idea what to expect intraday. Right, I would suspect after the move we had yesterday that there's probably some confusion, and we could end up with some balance either like this, or if we move lower, we could have a balance in this area right here. How will we know if we're having balance? The tick, as opposed to yesterday, will be essentially balanced. Plus 500, minus 500 all day long, right? And when we get that, if you want an example of what that looks like, you can go back on to Friday. Friday was a balanced day. It was balanced with, I believe, a downside bias, and that is what I would. That's what I would focus on. Anyways, it is. Let's see, 7 minutes till. I'm going to go get ready for my day. I'll call them as I see them. Rotation size today, 6 points is going to work for me. KJ, 6 points is what I'll be working off of. If you're a conservative trader, push to 7 or 8. I'm aggressive, as y'all all know. And 6 points will be sufficient for me today. I didn't see anything crazy yesterday. We had pretty much had a response at every zone, so I'm not overly worried about it. And by the way, there's econ at the top of the hour, right? And a lot of times you got to be careful with the market in front of econ, right? They'll do something like this where it'll balance, and then data will come out and it'll shoot us up or it'll shoot us down, and that'll really be the start of the day at the top of the hour. So consider that. But in the meantime, not a lot going down. By the way, I would have this trend line drawn on NQ, larger picture. That needs to be broken for any kind of downside move. Anyways, guys, I'll talk to you later. Have a great day. Y'all can reach me at tradingperform@gmail.com.